Hello everyone, this is Manish Chauhan from jagoinvestor.com, and today I will be talking about claim settlement ratio of insurance companies. A lot of investors have a lot of myths and a lot of misunderstanding of what this ratio is all about. When they go to buy any kind of insurance, they simply look at the claim settlement ratio and judge a company based on it. So they feel that if a company has a little higher claim settlement ratio, it is a better company compared to someone who has a little lower claim settlement ratio. But that is not entirely true, and in this audio I will be talking about this subject. So first, let us understand what is claim settlement ratio exactly. If you talk about the meaning of it, it simply means in an entire year what was the percentage of claims which was paid off. So you just divide the number of claims which is paid divided by the number of claims which is received. So if I have to give example, if a company receives 100 claims in an entire year, and if it has paid 97 claims, then it means that its claim settlement ratio is 97%. Okay, so this was the definition part. Now this information is available at IRDA website. Every year they issue a report. It is called as IRDA annual reports, and you can get all this information in this report. Now, to understand more about this ratio, you have to first understand that this ratio is a total of all the type of claims. So for example, if we talk about a life insurance company, then the total claims means all the death claims, all the maturity claims, and all the surrender claims. You combine all of these and then you call it as the total number of claims. So any policy where the policy holder has died and the claim has come, that will be counted. Then there are maturity claims, which is like if a person has bought an investment policy which had some insurance also, and it has matured after 15 or 20 years, and now the investor is coming to take back the money. Even that is called as a claim. Okay, and obviously almost all the claims will be paid, right? So even that is counted into claim. So you can understand that that is one of the reasons why a lot of companies which are very old and their maturity claims are coming now, their claim settlement ratio will be on a higher side. Then there are surrender claims, those policies which are surrendered prematurely. It has not completed the whole tenure, but the investor wants the money back. Even that is counted. Okay, so the first thing you have to understand that it is a statistic. It is like the total number of claims paid divided by the total number of claims received. It is not the probability. One of the big mistakes which investors do is that they think that it is a probability. They feel that if the claim settlement ratio is 95%, then the chances that their claim will be paid is 95%, and there is a chance that 5% chance is there of the rejection. It is not like that. To make you understand what I'm trying to say, let me give you a real life example. Let's imagine that you want to go out of India and you are going to the visa office, right? You want your visa to be approved. Now you go there and there are two counters, counter A and counter B. And there are 100 people in counter A and 100 people already there in counter B. Now, if counter A rejects 5 people and counter B rejects 7 people, right? Then if let's invent something called as visa approval ratio, right? So what is the visa approval ratio of counter A? It is 95%, right? 95 people out of 100 were approved. And in the same way for counter B it is 93%, right? But you have to ask the question, is the intention of the person sitting on the counter wrong? Is he rejecting just like that without any understanding and just for the sake of it? It is not true, right? You understand that the person visa is rejected because of the documents, because his document has some issues, or he is ineligible, or it is like a bad visa document. So what it means is that when you have to go to any counter, it will not matter to you because you are very sure that your documents are correct and you are totally eligible, right? So it will not matter to you. In the same way, claim settlement ratio should not matter to you because the claim is dependent on you, on how you have bought the policy. If you are if you have been honest at the time of buying the policy. So if you have done all these things, then obviously your claim is valid and it will be paid by any insurance companies. Insurance companies will be rejecting the claim only when it is a wrong claim, when it is not fitting into their rules, terms and condition, or if there is any fraud or anything like that, only then it will be rejected. So what it means is that if we come back to claim settlement ratio, in a given year, let's say there are two companies, company A and company B, and company A claim settlement ratio is 96%, whereas company B claim settlement ratio is 98%. It means that out of all the claims which the company A got, 4% of them were wrongful claims. They were not valid as per rules, as per terms and condition. They had to be rejected, and it will be rejected by any insurance companies, right? So, and if you talk about company B, in that case, 2% of the claims will be was rejected because it was a wrongful claim, right? In the next year, it can happen that company A claim settlement ratio is 97% and company B claim settlement ratio is 95%, because in that particular year, that is how they got the claims. That was the type of claims they got. Okay, so you don't have to worry about claim settlement ratio so much. Now there is something called as claim incurred ratio. Now this is mostly not looked upon. Let me tell you about this. Claim incurred ratio is very simple. It is the total amount paid divided by the total number of claim amount. So claim settlement ratio talks about the number of policies, whereas the claim incurred ratio talks about the amount which was paid, right? The quantum of amount. So it may happen that a company which has a low claim settlement ratio, it has a decent claim incurred ratio. So this is one of the metric you have to look at, right? Now, so when you are buying any policy, what do you check? The first thing you have to check is just make sure that you are honest while buying the policy. That is one thing which you have to do at your end. Understand the policy also, that in which cases it will pay, in which cases it will not pay. A lot of times what happens, many people who buy policies, and this happens specifically in case of health insurance mostly. So they buy the policy and they do not understand in which cases it will be paying, and they make claims which will be obviously rejected. I'll give you an example. Let's say someone buys a policy and it does not cover some of the illnesses up to 3 years, for example, and the person who bought the policy, he did not pay much attention to it. He just thought that, you know, it is a license to get any claims now, because he just have a policy, everything will be paid anytime. So this is something which the customer lacks. Now if something happens to his family and he just runs over the company that, okay, here is my policy, pay me this money just after 1 year, and it is not allowed as per the company rules, as per the policy document, then obviously it will be rejected. Now you can understand this, that claim settlement ratio will capture this, because it was rejected, it was not honored, the claim settlement ratio will come down. But you have to understand that it was a valid thing which the company had done, right? And it should be doing it that way, because you don't want your company to pay each and every claim just like that. Even if it is an invalid claim, if they will start paying any type of claim, the company will not be sustainable. The company also has to be sustainable over a long term, because it can serve you all, right? So it is in your interest that the company pays all the rightful claims and it does not pay any wrong claims. Okay. One very important thing you should be understanding is the insurance business model, how the insurance works, because if you understand that, then you will understand that, you know, a claim settlement ratio is not a very big thing. So insurance company has to make sure that, you know, it is only paying the rightful claims and not the wrong claims, because it will just not sustain over a long term, right? Okay, so to conclude, I would say that don't get very obsessed with claim settlement ratio. You can just have a look, but don't make any decision based on that particular ratio. It's not a very useful data, truly speaking, at least not for buying purpose. Claim settlement ratio also does not tell you a lot of things. For example, how fast the claim is paid, how easy was the claim process for your family. These are the things you we will not understand by looking at the claim settlement ratio, right? So make sure that whenever you are buying any kind of insurance, you fill the form properly, you buy things in the rightful way, be honest, and just don't give any reason for the company to reject your claim. If you give that, then obviously the company will be rejecting the claims. Okay, so with that, I will finish this podcast and I hope it was very helpful for you. In case you have any queries, please ask in the comment section, and do like and subscribe to our channel. Thanks a lot and bye bye.